Hello students. Hello students, this is Pallad Rabari, your host, and you're watching Pallad Rabari classes. In this video we will discuss macroeconomics class 12th. The name of the chapter is National Income Accounting. This is my 10th video on the national income accounting. In this video I will discuss income method of calculating national income. In my previous video we have discussed the value added method of calculating national income. There are three methods to calculate national income. The first one is value added method or the product method that we have already discussed. The second method is income method that we will discuss today. And the third method is expenditure method that we will discuss tomorrow. So without wasting the time period, let's start the class. Let us see what is the meaning of national income according to the income method. According to this method, national income is the summation of all the factor income earned by the factors of production for rendering factor services within the domestic territory of the country during a period of 1 year, with the including of net factor income from abroad. I repeat the same thing. According to income method, national income can be calculated by the summation of factor income earned by all the factors of production during a period of 1 year. When I say summation of factor income, what it means? It means I'm talking about the compensation of employees, plus operating surplus, plus mixed income of self-employed. So according to the income method, these are the three components by the summation of which the person can calculate the national income. Let us discuss all the components that we considered at the time of calculating the national income through the income method. One by one we will discuss all these components. Let us discuss the first components which comes under the national income. The first components is the compensation of employees. The question is, what is this compensation of employees? It refers to the amount paid to the employee for rendering productive services by the employer. So what is compensation of employees? It is that part of the amount, or it refers to the amount paid to the employee by the employer for rendering productive services. Compensation of employees, three items is being considered or included under the compensation of employees. It consists of salary and wages in cash. It consists of perquisites, and it consists of employer's contribution to employee or to the old age benefits. So compensation of employees is the summation of three items. The first one is salary wages paid in cash, second is perquisites, and the third one is employer's contribution. Let us discuss the first one, that is the salary wages in cash. It includes all the monetary benefits which the persons are getting, and the monetary benefits consist of wages, salaries, bonus. It means all the monetary benefits. It means all the cash which the person is getting from the employer, and it consists of wages, salaries, bonus, etc. The second is, which comes under the compensation of employees, is perquisites. The other name of the perquisite is perks. It consists of all the non-monetary benefits like RFA. RFA means rent-free accommodation. Then we are having free car facilities, free medical and the education facilities, etc. The third is employer's contribution to social security. It includes gratuity, it includes old age benefits, provident fund which the employer is giving to the employee. I hope the first component is clear, that is compensation of employees. Now let us discuss the second component, that is operating surplus. It consists of rent. The question is, what is rent? It is that part of the income which arises. Why it arises? Because of ownership of land and building. So what is rent? Rent is that part of the income which arises because of ownership on land and building. It is of two types. The first one is actual rent and the second one is imputed rent. Imputed rent means what? It means owner's occupied house. It comes under the operating surplus. I hope the first is clear. Rent. The next is royalty. The question is, what is royalty? It refers to the income received in return of giving intellectual right or property right to other person for stipulated time period. In a very simple word, what is royalty? Royalty is that part of the money which the person get after giving the intellectual right or the property right for the stipulated time period. Example, if a person has written a book, that very author give the right to the publisher publishes the book and sell and earns the profit, and in consideration of this he gives the fixed amount to the author, and the money which the publisher is giving to the author is called the royalty. Next is interest. The question is, what is interest? It is the money or the amount received on loan. I hope the interest is clear. What is interest? It is the money which the person get after giving loan. Always remember, two types of the interest should not be considered. One is interest paid by the government on public debt. It should not be considered. Second is interest paid by one firm to other. That should also not be considered. Third item is also there, that is if the household has taken the loan for the consumption purposes, that interest is also not considered. The next is that is considered under the operating surplus is profit. The question is, what is profit? It is the reward to the entrepreneur for his consumption to the production of goods and services. I hope the point is clear. I will discuss the profit in detail. Now let us discuss the profit. Profit refers to the income generated from the entrepreneurship. The profit can be further divided into following three categories. Let us see. Profit. It can be categorized into three categories. Number one is dividend. It is that part of the profit which is being given to the shareholders. Second is corporate tax. It is that part of the profit which is being given to the government in the form of taxes. The last one is undistributed profit. It consists of two items. Number one is retained earning, and the other one is corporate savings. That part of the profit which the organization is keeping for the future expansion is called retained earning, whereas that part of the earning which the organization is keeping safe to meet out the contingencies is called savings. So that is, in short, we can say that profit is the summation of three items, that is dividend, corporate tax, undistributed profit. Undistributed profit is the summation of two items, that is retained earning and corporate savings. I hope the profit is clear. Now let us discuss the next component of the income. The next component of the income is mixed income of self-employed. Mixed income of self-employed refers to the income of the self-employed person. When I say income of the self-employed person, I'm talking about the income earned by income of the barber, income of the teachers, income of the farmers, and so on. The self-employed persons uses their own land, they uses their own labor, they uses their own capital, and they uses their own entrepreneurship to produce various goods and services. In such cases, the factor income, that is rent, wages, profit and capital, cannot be separated or cannot be separately estimated. Example is income of a doctor running a clinic at his residence. These are the example of the mixed income of self-employed. Now let us see the steps to be considered while calculating the income through the income method. Under the income method, three steps is being followed. Under the first step, the domestic income is calculated. When I say domestic income, under the first step, what we have to do? We have to calculate the domestic income. Domestic income means NDPFC. How we calculate the domestic income? By submitting three items, that is compensation of employees, plus operating surplus, plus mixed income of self-employed. That is the first step. Second step is estimate NFIA. How to calculate NFIA or how to estimate NFIA? By finding out FIFA and theta and find out its net value, that is NFIA. That net value, that is NFIA, should be added in the domestic income to calculate the national income, that is NNPFC. So how many steps we are following? We are following two steps. Under the first step, we calculate the domestic income, and under the second step, we find out NFIA, and that NFIA should be added in the domestic income to get the national income. So the step that we followed in the case of income method is two: summation of or calculation of domestic income. Second is finding out NFIA that should be added to the domestic income to get national income. I hope the point is clear. Now let us discuss the precautions. That one should consider at the time of calculating national income by the income method. The first precaution is that the transfer earning, such as old age pensions, unemployment allowances, should not be considered at the time of estimating the national income. Why the old age pensions, unemployment allowance should not be considered? Because they are earned income. We never consider transfer income like old age benefit. Why we are never considering the transfer income? Because it is earned income. We only consider that part of the income which is being earned. We never consider the unearned part of income. The second precaution that I have to take is we never consider illegal income from the illegal activities like theft, gambling, etc. The third precaution is that the income from the sale and the purchase of second-hand goods should not be considered, but commission and the brokerage earned should be considered. Why the commission and brokerage earned? Because the person has earned it. Similarly, the commissions and the brokerage which the person earned at the time of sale and the purchase of security should be considered because it is the earned income of the factors of production. The next is windfall gain such as lotteries, capital gain should not be considered. Why? Because it is unearned income and we only considered earned income. The sixth precaution is if the profit as a whole is included, then the portion of the profit should not be considered. Example, suppose I have considered the profit, total profit I have taken. Then I will not consider the part of the total profit. We know that profit is the summation of dividend plus corporate tax plus undistributed profit. If I consider profit, then dividend, corporate tax and the undistributed profit separately will not be considered. I hope the point is clear. Dear viewers, that's all I have in this video. If you like the video, please spread the video as much as you can so that more and more people should join the class, should be benefited. During this pandemic time period, it's appeal. Stay home, stay safe, and above all, don't forget to wear mask. Om Shanti.